Hello everyone, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Hand Tech Markets on Tuesday the 9th of September. The financial markets are still a bit rocking from yesterday's considerable decline that we saw once again on cable. A huge 200 odd point decline yesterday that we saw, and that's come as the reports and the polls are suggesting that Scottish independence is a very real possibility now for the Union of the United Kingdom. So that is putting significant strain on sterling and pulling the cable rate lower, and certainly the euro also remains under pressure, following on from the easing measures of the ECB last week, and just general dollar strength that we're seeing across the board is significant. You look at this dollar index chart that we've got coming in here, and it's now up towards that July 2013 high, an incredible run in the last few weeks, huge move, and that level of July 2013 is the biggest since Q3 2010, so that is a big resistance at 84.58, not too far off that 84.46 at the moment. So it could be that the dollar is big. Could well come up against some resistance, but at the moment the resistance on the dollar is just being taken out consistently. So the strength of this run in the dollar is just incredible at the moment, and it's difficult to see what's going to stop it. But we'll wait and see what happens today. We've got the UK manufacturing production at 9:30, 2.2 expected there. Nothing too significant on the beat from last month, but certainly it could have an impact on sterling. Maybe, perhaps, traders will be looking more towards the Bank of England's Mark Carney, who's speaking at 10:45 this morning as well. So that might have an impact on sterling. But certainly at the moment, this dollar index is considerably stronger over the past few weeks, and shows little sign of stopping that move. There is the EU has engaged further sanctions against Russia over the last day, and it will be interesting to see now what happens in terms of Russia's retaliation to that. Perhaps regarding airspace over Russia, restricted airspace, and that would have certainly an impact on the Europeans as well. So because that is right in their flight path over to Asia, so that will have an impact. But it'll be interesting to see how the Russians react to these sanctions. Anyway, so my chart of the day today is the euro yen actually, and euro yen has it had an interesting move last week. It looked to be breaking out above that 138 resistance, looked to try and make that move, but a sharp correction that came on that ECB Thursday, where those easing measures come in. But it's now formed a bit of support, and that support's come in at that range low at 135.68, so just above there. That is where the support has come in, and that was formed yesterday. Certainly a big jump to the upside yesterday, so back into mid-range. But you look at these momentum indicators, all in bearish configuration. These MACD lines are just turning over once again. The stochastics remain pretty negative, and the RSI as well, but also trading underneath all these falling moving averages. You would certainly say that there's a bearish slant on the momentum indicators, and there's not until you got a confirmed move above 138. There's no real expectation of a rally on this euro yen. And if you look on the intraday chart, you'll see that it's just basically back into a load of resistance now on this within this range, around this sort of 136.80 level, which is just pushing above there at the moment, but certainly this is just a general band of resistance it's back into now, and certainly it would need to have a break above that 138 level to really justify pushing on, and believing that there is something in this rally. So you'd still be looking, I think, towards selling into strength now. Now that rejection of the 138 level has been seen once again through this period. I think the selling opportunities should come with any rallies. So we're looking still, I think, to see this rally just begin to probably peter out in around this sort of 130 136.80 towards 137 maybe, and then probably further decline in due course. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.